chronic trade deficits are no longer merely an economic problem. They're a national emergency that threatens our security and our very way of life. It's a very great threat to our country. And for these reasons, starting, the United States will implement reciprocal tariffs on other nations. India, very, very tough, very, very tough. The Prime Minister just left. He's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. In other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything, but now we're going to charge.
All right, the tariff war is here. Welcome, you're watching India Market Open, and the focus this morning is going to be on the implications for the Indian market, for the global market, for the world of what Donald Trump has declared. So the tariff war is well and truly on. The US has imposed base tariff of 10% on all countries. And when you see that, you would think, okay, that's not half bad. He's also announced partial reciprocal tariffs. Remember, the first claim was that whatever tariff is imposed by any country, we will impose exactly the same. But now they're saying that the US will impose half the tariff on each nation, depending on whatever is imposed on them. They will also be imposing 26% tariffs on India. So this is important, because where does this 26% figure come from? The calculation that the United States has made for each country is based on a lot of tangible and intangibles. For India, for example, 52% is the tariff that they have calculated that we impose on them. The actual figure is much, much lesser, in the range of 13% weighted average, whereas all the rest come from. A lot of it is non-tangibles, bureaucracy, red tape, all of that seems to have made it to this tariff calculation. So the number for India, you have to remember, is 26%. 10% is base, 26% for India. But some items, including pharmaceuticals, have been kept exempt from tariffs. That's an important point to note. So it's going to be item by item, company by company, that we need to track today. Also, US tariffs of 25% on all foreign automobiles comes into effect as well. Now, let's go into a little bit of detail on what is happening with India and the world. What are the kind of tariffs that are being imposed? So 52% is what they claim are the tariffs imposed by India on imports from the United States. How they've come to that figure can be a separate matter of discussion. 26% is what will be imposed to us. Now, for China, that figure is humongous, and on a global scale, that's also going to have an impact. Their calculation is 67% tariffs are imposed by China on the US. The reciprocal number is 34%. For the European Union, is 39%. is what they say, tariff charge to the US, 20% is imposed by the US, and so on and so forth. So you are going to see an impact across the globe depending on what the reciprocal tariffs are. For Vietnam, for example, it's a 46% tariff. Taiwan is 32%. But they have exempted semiconductors, by the way. So everything that they need, and which is important, will be exempted as we go along. 180 countries in all have seen tariffs being imposed on them. Let's quickly take you through the global setup before we move ahead on what the markets have been like. Now, the Dow futures fell nearly 1,000 points after Trump announced these reciprocal tariffs, and we pull up Dow futures for now and seeing how they're doing. US markets, though, ended their regular session in the green. Remember, Donald Trump announced these tariffs right after the US markets closed. So the session ended in the green. The expectation was that the tariff announcements wouldn't be that bad. I think the street is still trying to make sense of what it really means. So the futures, though, looking bad. Even the implied open for the Nifty, about 245 points down, and that's going to be some pain. In terms of bond action, bonds have plunged on tariff announcements as the 10-year dropped to 4.07. Gold has risen, not a big surprise there, to over $3,000 an ounce, $3,000 an ounce, 3,174 is the figure, and crude has plunged on those tariff announcements. Brent is at the $72 mark. Asian markets, meanwhile, have tumbled as Trump declares tariff wars. I'm wondering if you can pull up any of those Asian markets. But anyway, the implied open showing a big gash of red coming in. So Neeraj, Alex, is going to be a tough morning.
Yeah, no doubt. It seems like that. But I'm just wondering, Neeraj, whether there's some element of positive as well that you can take from it, only because, okay, in a hypothetical scenario, your relative is in Pune and it's raining over there, they've gotten wet, and then they find out, they've had a horrible day, but they find out in Mumbai there's been floods. So you're certainly worse off. Your neighbors are worse off. Vietnam is getting taxed or will be getting tariffs of 46%.
Yeah, I mean, imagine the plight of companies who moved base from China to Cambodia and Vietnam only to find out that, hey, we are also above 40%. But yeah, so I mean, Tamanna's outlined the larger pieces, and we'll of course get in our global experts in just moments from now. But just purely from an India perspective, and look at it from a weightage perspective, banking, BFSI, largest weightage, no impact. IT, second largest weightage, not in the gamut of things. Pharma, most feared, not in the gamut of things. So 3 large pockets not getting impacted. India doesn't export autos per se, largely not impacted per se. Sure, slowdown impact could come in, but largely a domestic story and not a US export story.
So dollar sliding as well.
Yeah, I mean, and again, remains to be seen. But purely from a sectoral perspective, 3 or 4 key sectors not getting impacted is a net positive. IT services though, because of the US slowdown, if there is a business growth impact, then that's an issue. And if global growth were to come off, US were to come off, then all of that will bring markets down, yes. But I think the two of you nailed it completely. The sectoral impact and then the neighbors' envy's owner's pride, if you will, kind of helps India in some fashion. So yeah, but gash today for sure. The question only is, a Brevard would try to think of whether this is a near-term bottom or no.
I'm just wondering also.
I don't think so.
You don't think so? So we haven't spoken about on this program so far, but dollar slid and gold is at record high. So that is indicative of things to come. I'm just wondering whether foreign institutional flows that have been stop and start, whether that turns completely, because US does not look as attractive as it was certainly about 4 months back, 5 months back. I'm just arguing.
Yeah.
I'm wondering whether because IT there's no impact, because banking there's no impact, these are 2 sectors that usually see buying. Will that come through?
Yeah, IT, only the problem is that the US slowdown will hit IT growth.
If FIIs want to put in money, I mean, we're still at 26% rate taxed nation. It's all up in the air right now. In fact, let's get the view from Ajay Bagga and Marco Papich, both joining in today while we talk about what really is happening. Ajay, let me come to you first. A very good morning. Is it worse than what was expected or as bad as was expected? Let me just start with setting the stage there.
Worse than worst case scenario. So it's rather than America first, it's America alone. And they are very irrational numbers that have been put out, 52% for India. And, the footnote says currency manipulation, trade deficit. They have put out a formula also just now, which makes hardly any sense, very subjective. So I would say worse than the worst case scenario. And on top of that, the hedge fund manager, who now masquerades as their treasury secretary, is warning sovereign nations that don't retaliate. I don't want any retaliation. I think all nations should take a sovereign view on this. And this is, I think worse than worst case scenario.
Okay. Marco, do you concur? And from the global standpoint as well, I'm guessing that currently, of course, the Australian Prime Minister is saying that there's no retaliation immediately. But the theory that this is to get people to the negotiating table, does that hold?
Well, first of all, I just want to concur completely. Not only is the algorithm to calculate this tariff 6th grade mathematics, it appears that for each and every country, effectively what they did is they took the nation's trade deficit with the US and simply divided it with the exports to the US. Like literally, this is where they get, India's tariff on the US, and then they half that. So is it a negotiating strategy? I mean, yes, it is. However, the issue is that if you ask for a price that's so high, sometimes the customer just walks away. And so I think that because this is worse than the worst case scenario, and because the math used to generate these tariffs is basically nonsense, I think that many countries may just walk away and say, we don't know how to talk to you. And that's the risk.
I think rare times that you have such kind of commentary, and we live in these almost dystopian times where we're trying to figure out what is happening. Marco, how do you see this panning out from an Indian perspective? This morning, viewers on our channel are tuning in. They're trying to understand what this means for the world, what this means for Indian markets. Obviously, we're going to take a knock like everyone else. But all things considered, with a 26% tariff figure for India right now, is it looking relatively better than those in the region? In terms of a market, are we looking relatively better, or am I right now clutching at straws?
No, I think this isn't about India or China or about anybody else. I think actually what the market has been telling you for the last 6 weeks is that there's an absolute exodus out of the United States of America. Like, let's back up. If 12 months ago you said this would happen, what would we all have said happens on April 2nd, 2025? We would have said, or in your case, April 3rd, of course, we would have said, okay, fine, the US dollar is going to rally pretty forcefully. Big tech is probably a place where you can hide because it's a safe haven asset. And the exact opposite has been happening for 6 weeks now, including today, where the US dollar can't rally against any of these countries. So why is that happening? I think because the big picture, the big story for the past 6 weeks is that the engine of US growth has been fiscal policy. That's really source of American exceptionalism over the last 5 years. They're not going to be able to stimulate the economy further, at least much further. And instead, the aggressive trade policies causing the rest of the world to actually wake up and start to stimulate their own economies, get their own houses in order. And I think that's what the currency markets are telling you, and actually relative performance of equities. So it's not just about India. I mean, almost every other equity market has outperformed the US. And that's not supposed to happen given the US is so insulated from trade, right? They're supposed to be the safe haven in the middle of a trade war. That hasn't happened, and that's going to deepen. So yeah, I think that over the next 5 years, India will outperform the US, but that's not saying much because I think pretty much every equity market will outperform the US.
Yeah, well, which is a question that we've asked so many people. Is this the, after 2 years of US exceptionalism, or after maybe four and a half decades, can we actually see the US market not do well, but other markets do well? Usually the US sneezes and everybody else catches cold. Could this time be different? Very valid points, Marco. Let me get in Mr. Bagga's view on this as well. Mr. Bagga, I heard you say that this was worse than the worst. But I think me and Alex were debating a point, or in fact, all three of us were debating a point right in the morning, that could this be that the neighbors have been hit so hard that some of the sectors which have been hit by tariffs in India, for example, might actually have competitive positives. Textiles, not gems and jewelry, but textiles, for example, or even auto components, because China is effectively staring at a northwards of 50% tariff, right? If you add 20, if in a presumption, everything is a hypothesis right now, in addition to 20%, you add the 34% levied. Vietnam over 40%, Cambodia over 40%. Can India actually be a net positive?
I'm not very sure. One, I don't want a positive like this. I think the world needs to be built on some principles. If Trump's signature is not worth the paper on which he signed. So 2020, he did the new North American agreement and he came back and upended it totally. So even these, international relations cannot be such kind of, negotiation tools is my feeling. Vietnam now, it has a huge trade surplus with the US because Chinese companies moved in. Same with Mexico. Mexico has got some relief today. The US Senate, Neeraj, passed a resolution yesterday overthrowing the Canadian tariffs. Again, that's not worth the paper it's passed on because Trump can veto it, or Trump need not even look at it. And unless the Congress passes it, the US Constitution, Article 1 enshrines that tariffs are the business of Congress. They're not the business of the executive. So the whole measure itself is flawed, but that's their internal outlook, we are nobody to talk about it. What I'm saying is the amount of global economic pain potentially that has been unleashed will have unintended consequences for all of us. We saw that in 2018-19. China goes and depreciates its currency. All emerging markets are forced into depreciation. It brings in imported inflation for a country like India. If you get a global slowdown, we also suffer. So I'm not in this beggar your neighbor kind of a policy. I don't think that's something statesmen should look at, or sovereign nations should look at. We should compete on a fair basis, which we do. Now, the US, most of the retailers and most of the apparel makers, the shoe makers, Adidas, Nike, cannot survive without the Vietnam factories. 39% of shoes of Adidas are coming from Vietnam. Nike, I think it's 70% plus. Lululemon and people like that are again 75% plus. What do you do overnight? You can't shut those factories, nor can you pay 50% more. The consumer will not pay 50% more. Good news is, anecdotally, talking to a lot of friends, Walmart was warehousing for a long time. A lot of US retailers have warehoused. That's why the GDP Q1 for US will come negative, because there is a drag of nearly 3% of excess front-loaded imports. So we will not see the impact immediately. It will take 2-3 months to flow through to the US consumer. But for the factory worker in Vietnam coming in today, and you're told that you're no longer competitive, or we'll have to relook at it, where are those markets? We have to see. $3.3 trillion of goods is the US import bill. Now, how will the world find $3.3 trillion? That's the big question. It's not going to happen overnight, and US consumer will have to pay. They are talking of $600 billion of more revenues through tariffs. That's assuming, again, as Marco said very well, it's sixth class maths. It's assuming that you move one lever and the other levers don't move. I'm sorry, it's like three-dimensional chess. It's everything will move moment you give an intention to move something. The consumer will pull back, your revenues will fall, you already have a huge fiscal deficit.
Right.
There are
my point is that have they not thought of all of this before doing this? I mean, what is the thought process? Why is this called Liberation Day? I'm going to take some of those questions to Ray Vickery, who's joining us exclusively. He's former United States Assistant Secretary of Commerce for Trade Development. Ray, thank you so much for your time. I know it's late where you are, but we're just trying to get a perspective on what the plan seems to be. Already you have China saying they will impose reciprocal tariffs to the reciprocal tariffs, and this can frankly just go on and on. Is this now a negotiating tool, or is this start of a new era of trade war?
Well, thanks very much for having me. I think that this is a very serious moment in the world trade system and in trade between the United States and India. Make no mistake about it, what President Trump has done here is take an axe to the very roots of the international trading system, first as embodied in the General Agreement on Tariffs and Trade, and then on the WTO, the World Trade Organization, of which India and the United States were both founding members. That process of having a consensus, most favored nation approach to trying to mutually reduce tariffs while building peace and prosperity is out the window. It's a kind of a situation in which Donald Trump believes that he can move manufacturing back to the United States across the board, and that does not augur well in of itself for India or for the world. What it does is increase the chances of trade war, retaliation, each nation saying, look, I can do it on my own, make America great again, make India great again, make China great again. and it's America first, India first, EU first, and the world trading system breaks down. Trying to find some bright spot in this by saying, hey, well, the tariffs on China will be higher than India, misses the very point that Donald Trump made time and time again this afternoon in his conference, which was that we can do without the rest of the world, and we will bring this manufacturing home. Now, the only bright spot will be that this system isn't going to work, and there have to be negotiations. There's already negotiation taking place, which is very far along between the U.S. and India, in regarding to something like a free trade agreement.
Right.
One hopes that something like that will come to pass.
Yes.
But the reality is that this is no way to run a railroad, much less an international economic engagement forum.
Yeah, things seem to be going off the tracks and off the rails at this juncture. But your point is well made in terms of negotiations between two countries. I'm just wondering whether a global entity, the World Trade Organization, whether there's any recourse at that stage for countries to go and say, hey, this is not done and this is not the way to do business. Is there any possibility of a recourse there?
No, not at the present time. The Trump administration 8 days ago took back and stopped all funding from the United States for the WTO. Make no mistake about it. President Trump is out to destroy the WTO and out to destroy the international system, which has kept relative peace and prosperity for the world, including the United States, including India, since the end of World War II. He views it as a bad deal to have a WTO, a United Nations, a World Health Organization, and we can have Fortress America. And we'll take over Greenland, and we'll have the Panama Canal back, and we'll make Canada and Mexico come to heel, and therefore we'll enter into a golden age. That's exactly what he's saying. This is not a situation in which Donald Trump feels that he will bend to the WTO or anyone else. And I might say from a domestic perspective, he doesn't even believe in checks and balances of our own Constitution. He, in the very statement this afternoon, when he got to talking about immigration, started attacking.
1 second, Ray, just to help us understand and just to help our viewers understand, can these announcements pass muster in the American legal system? Does this now have to be ratified by other elected members? Does it go to the Supreme Court, or is this it? The President of the United States says, this is what we're going to do, and it happens. Just trying to understand what checks and balances could we see in the days to come.
Well, the way in which the Constitution is written, and I'm a retired lawyer trained at Harvard Law School and had John Roberts as a partner in private practice. The way in which the Constitution is written, there should be a check from the judicial branch. But what is happening here, and your viewers ought to understand it, is that Donald Trump is trying to circumvent that entire system. What he's trying to do is to declare a national emergency, and our national emergency laws are very widely written. Even though there is no national emergency here in terms of international trade, and therefore circumvent the check which is provided by the judicial branch. And it remains to be seen whether or not this Supreme Court will stand up on trade, on immigration, on a very wide range of issues to this power grab, if you will. Unfortunately, the other branch, the legislative branch, is at this point completely compliant with the president. So is this it? One hopes that it will not be. One hopes that our constitutional scheme in the United States, which has served us for almost 250 years, will work. But that is, as they say, the jury is still out on that. And this afternoon's Liberation conference in the Rose Garden is just one more step along the way in trying to pull together all of this power into the executive branch so there won't be any checks or balances on the president.
True. Well, thanks for clarifying and in fact giving us insights on so many of these points, Mr. Vickery. Really appreciate your time. Thanks for joining in today.
Thank you for having me.
Now, Marco, thank you for waiting by as well. I want to take this point to you, and which is this, that one, I mean, it is debatable. A lot of people are writing that they may violate the existing federal laws and the US Constitution, and therefore it may well end up on the doors of the Supreme Court. Be that as it may, while we wait for that to happen, and if that happens, there is a bit of a window for countries to negotiate as well. Is there some change anticipated? I mean, Canada has said they are going to retaliate strongly. China has said that. Maybe some other countries might not. So could there be changes, or would you believe changes from what's been announced 6 hours ago is a definite?
Well, what I would say is that it would require a pretty significant market correction to motivate that. I don't think it's about negotiations at this point. I think it's really about President Trump realizing that his approval rating is going to be around mid-30s within weeks. You know, that more members of Congress, I mean, AJ made a great point about the Senate passing a pretty significant rebuke. Now, obviously, yes, it's not enough. President Trump can veto. The House may not take it up, but it's just the beginning. You know, it's only April 2nd, 2025. You have to understand something. Midterm elections are in November of 26. However, that's not what matters. What matters is that many moderate Republicans could face challenges within the Republican Party in primary elections. Primary elections for the midterms occur in Q1 and sometimes Q2, which means they have to start campaigning in Q4 of this year. So the constraints for many members of Congress are going to start increasing within weeks, months. You're going to have a lot of, centrist Republicans, veterans, business owners declaring their intention to have primary challenges against MAGA-aligned members of the House. And so those constraints are going to rise. And so I think that's really the only thing that can move President Trump at this point. I don't think the negotiations can happen, certainly not in that 7-day window, by the way. They set the deadline for April 9th. One thing I will say, you can take the president to court. Actually, very interesting case. After Nixon imposed the 10% surcharge, YKK, the Japanese zipper company, actually won the case against President Nixon. The problem is that that's what prompted the passage of the International Emergency Economic Powers Act, which is what President Trump has used to basically, impose these tariffs. Nonetheless, there is the court option as well. And I think that many companies will pursue that as well, basically claiming that the national emergency is not of the magnitude that President Trump claims. And again, courts are legal. However, they are not insensitive to the political zeitgeist. And that political zeitgeist, the context in 2-3 months, could be quite pernicious for President Trump, depending on the market reaction, economic reaction, and ultimately the reaction of the voters.
Important points that you're making. The ultimate question, though, today and also heading into the coming weeks, Ajay, is what does the Indian investor do? And not just the trader, of course, the investor, right? So in the context of crude slipping overnight, the possibility that the US consumer will have to pay more, growth slows down there, inflation rises, the unlikely situation where they will have to cut rates very dramatically. They may not be able to cut rates in the US. So all of that is happening on the global stage. India is expected to see more consumption taking place with the tax cuts coming into play. So how do you play that in the coming weeks and months?
Well, with insanity as state policy, how do you play anything? So I think caution and focus back on the domestic macro. Domestic consumption plays are the place to hide. Pharma, people are putting out reports today that pharma got saved. That's not true. He's looking at $100 billion coming out of Ireland every year of US companies, major pharma companies being headquartered in Ireland. 5 million population company is sending us $100 billion of medicines. How is that happening? That statement has been made. Sooner or later, there's 25% coming on pharma. So there are very few pockets to escape at a time like this. What are the smart money moves happening globally? People are buying gold. People are buying Japanese yen, Japanese government bonds, buy some Swiss franc. Indian investors can't do all that. So just go and buy some gold and wait this out. Wait this out. It will take 2-3 months. The economic pain has to hit home to the Republican voter. The stock market, 10% down is not moving. Trump to 2.0. Maybe 20% down stock market will make them wake up. Something will give in the next couple of months. But right now is not the time to be brave and try to do bottom fishing. Stay on the sidelines for now.
Sane advice, I would reckon. The fisherman's guide to fishing, right? Never fish in troubled waters. But gentlemen, both of you, thank you for an extended time that you've given us today, but it is an occasion that demanded that. So thank you so much, both of you, for giving us your insights. Really appreciate it.
I would sit the whole day and hear Marco and you, Neeraj. It was a very enjoyable program.
Mr. Bagga, we can all three of us here safely say that we'll do the reverse as well, just hear the two of you speaking the whole day. But for now, we'll call it a day. Thank you so much.
Thank you.
Thank you. Thank you. Well, so viewers, that's the entire macro picture that you needed. Now focus a bit on the micro as well. And let's try and do this. Just give a small sectoral piece and then try and make it a stock specific impact piece as well for you to get to know what gets impacted and how. So just trying to think, we discussed in the morning, BFSI out of the purview at all from an Indian perspective. So let's not get that. Highest sector, highest weighted sector, no impact. IT services, the first one off the block. No tariff impact for sure, but potential US slowdown may impact growth. So you got to watch out for IT services from an indirect impact perspective. Reciprocal tariffs for pharmaceuticals, no tariffs at all. Stocks could actually see a significant bounce back. Now, if you think about it from a US exposure perspective, Aurobindo stands at circa 48, Zydus at 47, Dr. Reddy's at 46. You probably expect a bounce back in all three of these. Keep an eye out for Zydus though. 2 or 3 of your products are reaching expiry dates, and therefore from a straight bounce perspective, all three could bounce, but Aurobindo and Reddy's probably hold the better stead. Reciprocal tariffs in apparels and auto parts, major tariffs raises, but tariffs on several South Asian economies are even higher. China probably stares at a 54% tariff, right? 20% levied on top of that already there, and additional 34%. Now, if you think of it as 54%, that's a major additional tariff, and therefore India is probably well placed relative to a lot of other Asian peers, and therefore auto components and textiles may be bad, yes, but maybe not as bad. What will definitely get impacted is gems and jewelry. India is the leader, unequivocal leader. There is a major tariff impact. The listed space has limited presence and therefore shouldn't unnerve too many of the stock market investors. So that's the summation, sectorally.
Yeah, and it's going to get a little more complicated because my sense is there will be exceptions within exceptions that will come through.
Yeah.
If it's on components, and if, for example, Vietnam is a big supplier of certain components, will India relatively be cheaper? So it's going to be very complicated algorithm, not
Yes.
grade 6 math. that we'll need to figure this out. But yes, broadly, that is the impact. In fact, let's get into more detail on that, because this is what we all want to figure out this morning, right? Before markets open. What is the specific sector and stock impact? And that's what we're focused on here at NDTV Profit. Mehika and Mahima joining us for more details on that. Yes, Mehika?
Let's take a quick recap first. A 26% tariff has been imposed on Indian imports, and as per US President Donald Trump, India charges only 52% tariffs on US import, and Trump says that this 26% reciprocal tariff is actually at a discounted rate. Now, it's key to know that this is very different from the differential which is in the weighted average tariffs, but as per MK, a 25% tariff could lead to an estimated loss of $31 billion for India's exports to the US. Now, what we need to look at are the top sectors and the top exports to the US which stand at risk. At the top of the list is electronics, $11.1 billion of exports in FY24. This was 14.3% of the total exports done by India. Gems and jewelry comes second, followed by nuclear reactor. This is part and machinery, followed by refined petroleum. But it's key to note that there are certain exceptions in the White House document when it comes to refined petroleum products. We also have articles on iron and steel. This is followed by auto and auto components, non-knitted apparels, textile articles, organic chemicals, and knitted apparels, as well as seafood and plastics are the ones that we export highly to the US. There are some key exemptions, of course. You have copper, your pharmaceuticals, semiconductors, and lumber articles. But I'll ask Mahima to join us to give us the more stock-specific impact and what could see a negative reaction.
Right. So I'll start with the textile space. Some companies that have exposure where they export to US, in terms of the highest exposure, there is Himatsinka Seed, which has around 83% of their FY24 revenue, which went to US, followed by Wellspun Living at 63%. Then we have Alok Industries at 45%, Trident at 38%, and KPR Mills at 19%. Some other textile names that also export to the US are Arvind Limited, something like Indocount Industries, Vardhaman Textiles, as well as Page Industries. Some chemical names which will also see the impact of this tariff. UPL has exposure of around 20 to 25%, followed by SRF at 20%, and then Jubilant Ingrevia at 9%. Some other chemical names that also export to the US are Aarti Industries, PI Industries, Atul Limited, Naveen Fluorine, Deepak Nitrate, Vinati Organics, as well as Gujarat Fluorochemicals. In terms of seafood industries, some companies that might see an impact, and the highest impact will be seen by Apex Frozen, which exports, around 63% of the revenue comes from US exports as of FY24, followed by something like a Waterbase at 40%, and then Avanti Feeds at 14%. In terms of stocks being impacted in the consumer space, rice exporters will see that impact, where around 39% of FY24 revenue of LT Foods was from US exports, followed by 12% in Tata Consumer, and KRBL stands at around 10%. In terms of some other companies which will see impact in terms of engineering goods, there is Kirloskar Brothers, L&T, Thermax, as well as Cummins India. In terms of solar makers, Vari Energies as well as Premier Energies will see the impact. In terms of power equipment makers, will see impact in terms of Bharat Bijli, KC International, Trill, as well as something like a BHEL, GNTD, Silchar Technologies, ABB India, as well as Voltamp and CG Power. In terms of some consumer names where there is US exposure, some names like ITC, Godrej Agrovet, Venky's, which exports poultry to the US, Britannia, Nestle, Haldiram's, will also see the impact. And some names in terms of ice cream, there is Vadilal which will see impact, Mrs. Bector's Food which exports biscuits will see an impact, and also something like a Kohinoor Foods in the rice space will see an impact. So all of these counters might see the tariff impact going in.
Well, one thing we know, Mahima has strong lungs. Did you breathe through the piece at all, Mahima? A good one. Thanks for putting that into perspective. You know, just one point here. I mean, and again, today everything will be down, but I wonder how the two of you think about this. Chemicals, for example, right? India's biggest competition, China, 54% tariff. Yeah. We are putting it out that these companies will get impacted because yes, there are higher tariffs, but the place from where US would be sourcing its chemicals per se, China, 54%. How do you then say, could India actually be more competitive with the renewed tariffs prices? Similarly for textiles, right? 46% for Cambodia, 44% for Vietnam. India is at 25%. Maybe we'll be better off than what the street fears right now.
So on the face of it, logically that makes sense. My only problem with that theory is that how much of what is being said today actually turns out. for any country, for any company to change its supply chain to another country, you've already established factories, is going to take time. You saw US automakers go to the White House, beat down the door and say, "Ki bhai, give us some relief." What's to say that others don't do it?
Yeah.
So on paper, I get the theory completely. India's
But then it will come down for everybody, right?
42.
It may not happen that Vietnam पे 46% का 36 कर दिया, तो India will stay at 25. Indian textiles might also see that change. That's the point I'm
The
making.
push will be to protect current and existing supply lines.
But allow some leeway. I mean, I'm just trying to think out loud. I mean, yes, so you are right, Tamanna. A lot of important variables here. But on the basis of what's happened just far.
It's not all negative.
It's not all negative because...
It's a fair point. But I think it's an important point also to make that this is the first salvo in what is likely to be a
prolonged battle.
protracted battle.
Yeah.
That will be fought, I think, on multiple fronts, not least of which within that country itself. There's going to be arguments against what has been announced today.
Yeah, so we'll have to wait and see. Anyway, we're trying to make sense of what's going on the best we can and give you the information on all the facts we have. So let me get to my watch list before we move ahead. Pharma stocks is the first one that I'm picking, and Neeraj talked about it briefly as well. But the reason is that India charges 10% tariffs on US pharma imports, but the US has mentioned pharmaceuticals as an exemption, and rightly so. The dependence on the United States on imports from India and Indian companies is very, very high. This is why we're asking, is this a chill pill? Companies with US exposure is what we should look at. Gland Pharma, I think not Gland Pharma or Aurobindo Pharma, Dr. Reddy. So these are some of the ones that you have to look at today. And the kind of moves that they've seen ahead of the announcement as well gives you a sense that already you have seen a 1 month up move on some of these companies. Year to date is been about 10.7%. So you could see some improvement in the run up to, you know, the kind of clarity that we're requiring. Keep an eye on pharma companies, specifically these three today. The other on my list is BEL, thumbs up from my side. Remember, this is a stock which got hit pretty bad in yesterday's trade. The company has received orders worth 593 crores for providing maintenance services for Akash missile systems. They've concluded negotiations with customers for the acquisition of orders worth 5,000 crores. Now, why am I choosing BEL? Because of the fact that it completely missed out any kind of up move on defense stocks, was under a lot of pressure yesterday, and the reasons were good. That's because they've missed their FY25 order flow inflows guidance. But with the kind of valuations we're now seeing, could you see a bump up in BEL momentarily based on the news is what remains to be seen. Of course, you have to keep in mind that right now, the overarching theme will be a bearish one because of what is happening with tariffs. But among those, these are some good stories that you could see. PNB Housing is the other one, and that's because of its business updates. In the middle of all of this, remember, business updates are coming in as well. So here's what Morgan Stanley is saying on PNB Housing. That's the third stock I'm picking. Again, a thumbs up there. Morgan Stanley is maintaining an overweight with a target price of 1,350 based on their Q4 updates. Their affordable housing loan book has reached a 5,000 crore milestone. The execution remains on track, and there's a forecast of a 21% loan CAGR between FY25 to 27, 13% ROE return on equity in FY27. Morgan Stanley says the stock looks attractive on both headline and relative valuation, with meaningful scope to re-rate. They also see a good margin of safety for earnings and valuation. So those are the top three on my list.
Yeah, I mean, so in Tata Motors will be there, but Puneet will talk about it in detail, arguably one of the most impacted ones.
Yeah.
I just have one more stock to it, and that is, two more. So actually, one of them is a business update, Dabur. The business update was not good. They've spoken about fairly slow growth and 100 to 150 basis points operating margin erosion as well in Q4, as a result of which MK has gone ahead and cut the target price to 450 from 500 as well. So Dabur could be a soft one, even though it's not in the tariff tariff list, if you will. And the other one is, I wonder if copper prices, because copper has been exempt from tariffs, correct a little bit. They'd gone on a breakneck uptick, and as a result of which Hindustan Coppers and the likes were having a great run, could that reverse? So that's the second one. And the third one was Tata Motors, but I think the person who can talk about it very, very well is our colleague Puneet. So he joins in to talk about the auto sector, which arguably gets impacted, or maybe some exemptions out there too. Puneet, tell us the potential ramifications of this move on the Indian auto and auto component sector.
Well, thanks for that. So we're definitely looking at the data for all these companies, as you rightly mentioned, but just a couple of questions at the end, which investors will be left by after today's session opens. So first, of course, 25% blanket tariffs on foreign autos. That does not impact the Indian automakers, but Tata Motors get impacted because of the JLR imposed from UK and Europe that they do. So definitely a potential impact expected there. US is also putting a 10% tariff on UK, so that again is an impact on Tata Motors. When you look at the numbers in terms of revenue share, they had roughly 23% of revenue for Tata Motors from FY24 just from the USA. While this is only an annual disclosure, the number would have increased because of the volume increase as well in this year. Sona BLW is another one. They already have a factory in the US, which is a sizable one, but definitely a very high share of revenue from the US as well. Bharat Forge, as well as is on a consolidated basis 25 to 28%, but on a standalone basis it's upward of 35% of revenues for Bharat Forge from the US. Samvardhana Motherson, again, it's an annual disclosure, so 18 to 20% revenue from one big country is something that's an impact there. The other ones, Ramkrishna Forging is the other one, which has a big sizable impact along with Balakrishna Tires, because both of these have no plants in the USA, so it's all exports from India that they do, and definitely an impact expected there as well. Let's just deep dive slightly a little bit into the companies, because Tata Motors, as we spoke about, 70% of revenues coming in from JLR itself, and that's 78% of the EBITDA. So even any kind of impact on this will be hurting the margins going forward. When you look at the volume picture as well as the revenue picture specifically for USA, we've seen volumes are roughly about 33% from the USA in FY25, the 9 months, and in terms of revenue, it's roughly about 23%, while volumes are 26% for FY24. And Kotak had a very interesting note on this today. They mentioned that volumes in USA can decline by 25 to 35% because of this, and they roughly export 1 lakh cars from the USA. That's 25% of their, so definitely an impact there, and it could lead to EPS cuts of 15 to 20%. Investec is also not estimating over the next 2 years any kind of EBIT growth. So another key negative there. When you look at Eicher Motors, and this is a name that's not talked about in terms of exports. Eicher Motors, Jefferies has a note that they had export sales of 1 lakh units in FY25, and roughly about 35% is to North America. While smaller on an overall share, we might see some impact on Eicher Motors as well. The other ones, Sona BLW, and we've spoken about that as well in today's discussions about the company. They have a plant operational in Mexico as well, while another one is in US for 10 lakh units for Tata Motors. So while they have a 40% share from the USA, how much is locally manufactured is a key question, and hence, while we might see a negative reaction today, the stock's already down 21%, so watch out for that one. The Kotak has mentioned specifically that there could be an impact of 400 to 500 basis point on the profitability for Sona BLW in the short term. Definitely starting wise will be negative, but very interesting play going forward. Samvardhana is the other one I want to just mention briefly. There could be an indirect impact because of the imports from Europe specifically. So they are a big supplier to BMW, big supplier to Mercedes, and while 18% of revenue is coming from the USA, how much is that from the US internally and how much is from the factories in Europe? So it's going to be, the stock price has corrected almost 20% in the last 3 months, and there is the variability of how much impact would we see on that aspect. Bharat Forge and Ramkrishna Forging, we mentioned 35% of revenues coming in from there. Kotak is specifically mentioning that tariffs can have a severe impact on margins for the forging companies, and this is the second key negative after the US EPA is deferring the pre-buy essentially in FY26. And just finally on 3 to 4 other companies, Balakrishna, Timken as well as CEAT, they have roughly 10 to 18% coming in specifically. That's what Kotak is mentioning. So essentially the two questions for investors for Sona BLW, as I mentioned, they have a plant in Mexico, but they also have a plant in the USA, and players like Samvardhana Motherson with their global outlay, it's something to watch out for. And finally, on the China factor, higher tariffs compared to India, could that be an opportunity? That's something to watch out for.
Yeah, so there's a lot to unpack here. Okay, I'll take a second on something that I've been trying to figure out this morning, and I've actually asked Grok this question. Maybe since it mirrors how Elon thinks, could be the closest to getting some idea. I've been trying to figure out how did the United States arrive at the figure of 52% as the number that India imposes on US. Remember, these are reciprocal tariffs, and then they've said we've halved it. The World Trade Organization figure of our weighted average tariffs in the US is 12%. How have you come to 52%? We've been trying to figure it. So what Grok says is that the calculation seems to be an estimate based on the deficit between the two countries, the trade deficit, divided by the exports of the US to India, and that figure comes exactly to 52%. Now this is a guess, that could be one way of looking at it. The US also cites non-tariff barriers, including red tape, bureaucracy. So this is now you're going into a space where you can make anything up. This is your perception as the Trump administration. And that's how they've come to the 52% figure. First of all, there's going to be a backlash and a counter from every nation saying that, how have you come to this number? Where is this, in each country's case, 52%?
There's that old joke about chartered accountant that got hired. You give the final result and then you back calculate and give the correct calculation. I don't know if that's ultimately the formula that they've come up with.
I wonder
they
if
wanted 26%.
I wonder if there's a chatbot which generated those tariff numbers as well. Anyway, Neera Vasher joining us this morning, Head Equity Research Analyst, Latin Manharlal Securities, speaking to us on a very, very interesting day. Neera, we're looking at the implied open and it's going to be a painful morning. What do you do is, I think, the foremost question. Are there opportunities here for the brave, or this is a day to sit on the sidelines and sit this one out?
Yeah, good morning and thank you for the invite. I think it's better to be cautious because the worst which was expected has materialized at this point of time. I think worldwide most of the economies have been slapped with tariffs. We have been slapped with a 26% tariff, and I think the agenda of the US is very simple, to move the manufacturing bases to locally. And that is the reason I think most of the manufacturing locations across the globe have been slapped with such high tariffs. Now the question arises is that what will be the next course of action? Whether there is going to be a backlash, whether there is going to be a counter moves from all the economies which have been impacted. As far as India is concerned, then I think we are already on the negotiating table, and the best course of action will be to work out a bilateral trade agreement where we give we work out a middle path and give a relatively attractive duty access to the goods from the US and work out a middle path.
Stay on, so much more to talk about. We will try and discuss about specific pockets. In fact, you got a pharma analyst joining in as well on the other side of this very quick break. That's one sector that will gain. So stay tuned, we'll be right back.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the,
Welcome back. You're going to have a rough morning. There's no doubt about that. 240 points gap down for the Nifty is what the implied is indicating. Maybe one oasis could be pharma companies today in the market. Now, why is that? Because the exemption list that the United States has issued after the tariffs, the reciprocal tariffs were announced, is 37 pages long, by the way, includes pharmaceuticals. For the impact and to break that down, I'm speaking now with Vishal Manchanda. He's Senior Vice President, Institutional Research at Systematic Shares and Stocks. Vishal, good morning to you. Thank you so much for joining us. Is this the relief that the industry was looking for, or are there still more grey areas there when it comes to reciprocal tariffs? And put it into context, why would the United States have to exempt pharmaceuticals?
So I think pharma is exempted for now, but they have said the sector is under review under Section 232 of the Trade Act. So basically that deals with any tariffs that they can impose on sectors or products that pose threat to the national security. So exempt for now, but under review, and we might see tariffs later on the sector. I think the reason it is exempted for now is probably because the pharma supply chain is very complex. It's almost like every single molecule has got a very different supply chain. You'll have to look at everything, every molecule. So every molecule is a different product, different sector, if you want to look at it that way. So I think the review will be quite long. They'll have to understand where each molecule, they'll have to trace out the supply chain for each molecule. So whether they have dependence on India, or whether they have also dependence on China and which other countries for that specific molecule to address the issue of national security. Primarily what US actually wants is they don't want to be entirely dependent on pharmaceutical drugs for other countries. So I think that's where pharma is a challenging sector.
Yeah, Vishal, morning. We spoke with Habil Khurakiwala earlier in the year, and the point that he made when we were asking him about potential tariffs is that he was not too worried, because supply chains as they exist take a long time to set up, and because of the kind of dependence that they have, the US, they're not going to be able to shift things, forget overnight. It's not going to be shiftable even in a couple of years. So from that perspective, is Indian pharmaceuticals protected?
Exactly. I think it can take a decade or more to kind of have a supply chain around pharma. It's very complex. Every single molecule has got a unique supplier, and there are multiple suppliers within each supply chain of each molecule. So that's the challenge here. And again, so I think the better way for US to address the pharma imports would be kind of to diversify their sources to multiple countries. That's one way. And then, but the first thing they'll need to do is trace where is the supply chain coming from. The formulation is coming from India, but where is the API coming from? Where is the key starting material coming from?
Vishal, please stay on, Vishal. We'll just have to cut across to the EU Commission President, Ursula von der Leyen, addressing the media.
Se sont déçus par notre plus vieil allié. Oui, nous devons nous préparer à l'impact que cela aurait inévitablement. L'Europe a tout à ce qu'il faut pour traverser cette tempête.
All right, let's get you details of what exactly she's saying, because looking at the timing, already China has announced reciprocal tariffs. Russia, I believe, has announced reciprocal tariffs. Is European Union going to do that as well?
Because Canada has sounded very strong on that as well, so could be very, very interesting.
Yeah, so this is a space that you need to watch for what's happening. Vishal, let me come back to you. Let's get stock specific this morning, because what we're aiming to do today to everyone who's watching is give them specific advice on what to do. If you're holding pharma, what do you do today? If you want to add on, should you add pharma? If so, which companies do you think will come out relatively unscathed? Are you looking at a Dr. Reddy's, a Sun Pharma, companies with that kind of exposure to the US?
I think the ones with lower exposure, if you want to just look at the large cap names, the ones with lower exposure should always be preferred over the ones with larger exposure. Sun Pharma and Cipla would figure in that category, which have lower exposure to the US. While if I look at Zydus, Lupin, and Dr. Reddy's, they have relatively larger exposure to the US, between 40 to 50% of their overall revenues. So I would kind of be with these names, Sun and Cipla, to kind of be on the safer side here.
Vishal, I'm just trying to understand the ones which have the highest exposure. And chalo, Gland Pharma is into the CDMO, CRAMS, etc. But the generic companies, right? Zydus, Dr. Reddy's, Oro, large exposure, right. Yes. Had corrected. You don't foresee a pullback rally there?
So I essentially think it's fundamentally difficult for tariffs to impact pharma because we are so large. We are so large there in the US. As you had spoken earlier, it's going to take multiple years for anyone to shift supply chain. And then if you want to increase dependence on China, that's again not in the best interest of the US to increase dependence on China for the pharmaceutical drugs. So I think in their best interest, it should rather remain more dependent on India than increase dependence on China for the drugs. So I
look at Pfizer.
Would believe pharma is not going to get impacted. If tariffs come, they will be passed on, and we don't have any space to absorb the tariffs within our cost structure. We probably are doing low single digit ROE on the commodity portfolio that we sell to the US.
Okay. So I just want to address the first ticks coming in, and of course these will settle. But since we are having a very relevant conversation right now, and of course, again, these will settle. This is pre-open rates first tick. Yes, the Nifty is down, expected. But look at Pfizer, look at Gland Pharma, look at Oro Pharma, look at DRL, look at Zydus Life. This is where the safe haven seems to be. Look at Sun Pharma, for example, a Natco, a Wockhardt, Alchem Lab. You pick up anything in that space, and that's where all the action is. The safe haven, so to speak, a Mankind Pharma. Vishal, if I still have you with us for a last call, would you be looking at domestic suppliers more favorably or those that have US exposure?
Yeah, so domestics are better off because they don't have any US and there are no concerns there. But we'll have to look at the valuations of the domestic pharma names and choose and pick which ones have the right valuation as of now.
Top pick, Vishal, among the domestic focus players?
So I think Ajanta Pharma is one name. They have little dependence on the US, but they're largely 78-80% branded generic company with sales coming from India and other branded markets like emerging markets and Africa.
Okay, Vishal, thanks so much for this. Thanks for getting us that update. And I believe Shrikant Chauhan is with us. So take a moment to go to him because we need to round off this conversation on pharmaceuticals. Shrikant, thanks for joining in. Before we get to the market-wide call, just a word on the pharma majors, all of which will start off well today, but some of which had corrected quite significantly in the run-up to this, right? I mean, the US generic companies, the Oro, Dr. Reddy's, Zydus, etc. If they start off 4-5% higher today, or maybe more, would you trade them on the long side, Shrikant?
Good morning, Neeraj. Good morning, Tamanna and everyone. See, like for pharmaceutical companies, especially those which have impacted in the last sell-off, I would say that it is better to stay away because they are opening up only because of for the time being, they have exempted these companies. But in the near future, again, they are going to consider these pharma companies, and it is better to always stay away from taking any specific trading view on those companies or sectors where there is uncertainty. But yes, those which are not heavily impacted, I can say Syngene or maybe Piramal Pharma or Cipla, I think those stocks we need to keep on our watch list along with the hospital stocks. So there we are specifically bullish in that we like Apollo Hospitals, NH. But for these companies, I think it is better to stay away.
Why don't you also get your index view where seeing the rates settle as things stand? Of course, the expectation was for a sharper cut perhaps it's not going to come through because some of that information is going through the system. But what is your estimation in terms of where we find support today?
Good morning, Alex.
Good morning.
Yeah, I think, see, like, and I specifically follow the particular statement that buy on rumors, sell on news. So this time it was like more or less expected that US is going to impose between 10 to 25% tariff on India. And maybe because of that, that was discounted in the recent fall that we saw from the highs of 23,800 to almost 23,200 or 100. So I am of the view that after this lower opening, we are expecting market to recover back. I'm not expecting market to sustain below the levels of 23,000 so easily. So yes, we could see some liquidation because of option data and the FIs have short sell position on the market. But broadly, I'm of the view that 23,000 is the area where we should look for taking some contra bets in the market. And I'm expecting market to remain between the range of 23 and 23,500 for the next few days.
So what is the picks today? What are the picks looking like, Shrikant, if any? And you made a good point, expiry day as well. So the strategy there specifically and picks.
See, for large cap companies, it is better to see that how actually the market opens and it reacts after the opening. But there are a few companies from the mid cap basket which are doing really well. In that, we like Angel One, which is around 2350. In fact, we like most of the stocks from the capital market segment. In that, we like Angel One, which is around some 2350, 2325 sort of levels. It is opening a little lower. So it's an opportunity for traders to create a positional trade on it with a stop loss at 2250. I am expecting stock to move towards 2450, but in the near term, I am expecting stock to move towards 2600 sort of levels. We also like Chambal Fertilizer, which is around some 630, 635 levels. And there also, if we consider the overall technical pattern, it is showing a lot of bullishness. It is into breakout. We can keep stop loss at 610 for creating long positions. And on the higher side, we are expecting 665 sort of levels.
Okay, so the capital market play Angel One and Chambal Fertilizers are what you should keep on your radar. Let's talk about the reaction that you are likely to see on the diplomatic front, because ultimately this is an announcement by Donald Trump. You're likely to see the Commerce Ministry that has already been in action take things to the next level. So what are we hearing from sources from the Commerce Ministry? In fact, we've got our colleague Rishabh Bhatnagar who's spoken to them, and here's what he had to say.
Right. What we're hearing from Commerce Ministry sources is that the analysis and the potential repercussions of the tariffs imposed on India have already been started. The studies regarding the impact have already begun at the Commerce Ministry. Two sets of tariffs have been imposed in India. The first one being a common 10% tariff that has been imposed across the board on all countries that starts taking effect starting April 5th, and an additional 16% reciprocal tariff that has been imposed in India that starts taking effect on starting April 10th. Now, initially, prima facie, Commerce Ministry officials are saying that these tariffs are a mixed bag. There will be certain sectors that have been impacted negatively, but there will also be certain sectors that stand to gain, because India will gain a competitive edge against other manufacturing nations like Vietnam and Indonesia. So somewhat of a mixed bag here, given that there might be scope for some sort of a competitive edge in the electronics or the IT or the automotive sector even. Another important point that is there is that the US president, does have the powers to reduce these tariffs as and when certain American concerns are satisfied, or countries are willing to negotiate or bring down their own tariffs with regards to the US. So India is already ahead in that scenario, given that India is already on the negotiating table with the US with regards to a bilateral trade agreement, the first tranche of which will be ready by September or October this year, by fall of this year. So India already ahead on that scenario. Number three, what we're also hearing is that a more elaborate statement or an analysis is going to be coming by the Commerce Ministry during the day, and we will stay tuned to that and track that for you.
Okay, so that statement becomes important, and I suppose part of that statement will also be a reiteration that there's a parallel conversation going on. Let's get a market view on how the day should pan out for you. Rahul Arora, CEO of Nirmal Bang Institutional Equities, joining us now. Very good morning to you, Rahul. You know, we had a comment this morning from one of our speakers that said this is worse than the worst case scenario. Is it really?
Morning, Tamanna. Thank you for having me on the show. I think it's a little too early to comment on exactly how this is going to play out, because this has happened practically in the dead of the night. So I think even the government of India is going to take some time to understand its complete impact. Lesser mortals like us will probably take a little longer time. But yeah, I think to the extent that 26% reciprocal tariffs have been announced, I think the one thing that is clear, Tamanna, is we're very obsessed with the equity markets. Every now and then it's probably, it doesn't hurt our cause to just veer into the bond market and see what they're doing. And I think if you looked at the 10-year in India yesterday, and the fact that the US 10-year fell by about 3.5% yesterday, somewhere it is indicating that we're going to head into a massive slowdown / minor recession at some point this year. So I think the bond markets traditionally tend to move ahead of equity markets, and they're probably more accurate in terms of forecasting. So obviously this is going to have an impact. It's a little too difficult to quantify what the extent of the impact will be. But as I was hearing your colleague, there might be some, benefits to India vis-a-vis countries like Vietnam, etc. But I think the differential with China has by and large been taken out of the window. There's just a 7-8% differential with China on the reciprocal tariff. So we'll have to see. There is no question this is going to be inflationary. There is no question that this is going to have an impact on US consumption, and that the C part of their economy will slow down. And add to that we're not closer to resolving the war situation in Russia and Ukraine. And President Trump is finding ways to be elected for a third time. So I think we're starting the fiscal year on many uncertain notes. It's a little difficult to quantify exactly, how bad this could potentially be. The only one area of ambiguity, Tamanna, if I may, is on the pharmaceutical side of the tariffs. I think I've read a lot of reports since the morning saying that, pharmaceuticals are exempt. I think a slightly deeper read of that may be warranted because India does, of its $46 billion trade deficit with the United States, almost 15% of that is pharma. So if you were saying that reciprocal tariffs were imposed but pharma was exempted, that's a huge thing. So I'm not sure if that's entirely true. It would require a slightly deeper read, but I think that's probably one headline that people have latched onto, but I'm not sure if that's entirely.
No, but Rahul, so there is a White House statement which says that things like copper and pharmaceuticals are exempt. So why a deeper read?
I think, Neeraj, if you look at what the president's speech itself said, he said he wants to bring back pharma manufacturing into the US. I think that was the one line that he himself said. So I'd want to read the fine print. I'll be very honest with you saying that I haven't, because it ended at 2:30 a.m. our time. So it probably requires a deeper read. But
understandable.
I just think, Neeraj, this is going to be ongoing, right? I think you've seen this with Mexico. He imposed tariffs, then there were some issues with migrants that were addressed. And I think on a case-to-case basis. But one thing is clear, Neeraj, I think, if you and I were having this conversation, say in October last year, in an era of globalization, nobody thought we'd be going into a world that was inward-looking and protectionist. So I think that's the new reality for the next at least 4 years. And if he manages to secure a third term, then maybe another 8 years. You never know. So it's not going to be easy on global growth. That's a certainty. But like I was telling Tamanna, it's a little hard to quantify. The one thing I'll say, Neeraj, and I'll say this at the absolute outset of the fiscal year, I don't think this is a year we're going back to the new highs, to the old highs. I think 27,000 on the Nifty is a distant dream now for the remaining 9 months. That's one thing I can say with some reasonable assurances, I think.
Fair call. Rahul, we are about a minute and a half left for market open. So very quickly, are there, in a minute if you can answer, and then we'll do in detail, are there net beneficiaries from this? You look at pharma deeply, fine. Anything else?
Not as such, Neeraj. Nothing that will move the aggregate, earnings per se. Because from a market perspective, it's IT, FMCG, banks, and Reliance. That's basically 75% of the Nifty. I don't think it's going to, move the Nifty in a major way. I don't think there are going to be too many material benefits that are coming out of this, is my sense.
We're going to talk about this in more detail, Rahul, with you, of course. Shrikant, very quick view. We've got a minute left. Anything that stands out that you've seen in pre-open that gives you the confidence to place a bet?
I think, see, while looking at the bond yield and all, I'm of the view that we should look for taking some contra view on banks, large bank especially. And in that, we like ICICI Bank, which is around some 1335 sort of levels. In case if there is any lower opening, then it will be an opportunity. Around 1300 levels, the stock is having excellent support. This stock can again move back to the levels of 1400. So Axis Bank, HDFC Bank, as well as ICICI Bank should be on the watch list.
Okay. Shrikant, not taking any contra trades, right? Are you? 20 seconds left, aside of banks. Any pharma, anything else? 20 seconds?
Yeah, from the pharma space, specifically, we like Syngene. It's a contra play, but I would say that this stock can do really well. It is consolidating around 720-25 levels. And if we consider its technical pattern, then I think the stock can again move back to the levels of maybe 850, 860. So there is a decent upside.
Right. Okay. Shrikant, we'll have to start the markets. So, big drop on open. Is it as bad as people thought it to be? 160 on the Nifty. This is actually well behaved, I must say. This could have happened on any day. That it's happening on the day after the tariffs have been announced. Pretty good reaction, I would say. This is music to the ears. The Sensex was 800 points on pre-open. It's 513. Now this could change, of course, but the open is very interesting. Yes, IT is feeling the indirect impact. US growth slowdown is being seen out here, which is why another 2.5% for Nifty IT, which has already fallen about 20%, by the way. Bring up mid caps and small caps. I wonder if they are also well behaved. This is extremely strong positive reaction. Anybody would have told that the small cap index will be down only 0.2%, and you would have thought that the person needs to rewire. But okay, now sinking a bit further, fair enough. We'll wait for the first 5 minutes to actually pronounce how good or bad start it is. But let's get individual stocks and just see what's happening on the large caps at least. A tick of red, a large tick of red. IT is suffering. HCL Tech, Wipro, TCS. If you thought IT had not gotten tariffs, yes, they haven't, but the slowdown impact out there. Bajaj Auto, 2% interestingly. Adani Ports, ONGC, Zomato. So no necessary reaction only to tariffs. Other things are happening as well. And on the flip side, pharmaceuticals, Dr. Reddy's, Sun Pharma, Cipla. Well, that's the bucket of strength out here. Very interesting start, Tamanna.
It's exciting to hear you say, Neeraj, 150 points down is music to the ears. At least not as discordant a note as one would have expected, perhaps. But yes, it's a tough morning, no doubt. I want to just pull up the advanced decline ratio if we can, and then re-look at the sectoral indices to get a sense of the broader markets. And this is what should give you some heart. It's not so skewed. 836 advances to 1409 declines. So this algorithm is not half bad, and this is how we're looking at where the market is going this morning. Let's pull up the sectoral indices just for a second for you, and no prizes for guessing that the Nifty Pharma will be right on top, but 4.5% up. Healthcare, CPSE is okay. A sea of red. Nifty IT is expected to be a bit shaky. Bajaj Auto and the others have had their updates out. Perhaps that's not something that the street is liking. Plus tariff impact. So you're seeing the tariff impact on one end, but also a market which is seeing some strength coming in at these levels. I want to pull up the top gainers and losers on the broader indices before we get to specific stocks, because that will give you an overall picture much more clearly. And we spoke about Gland Pharma this morning when we spoke about pharma stocks. That's about 9.5% up. Dr. Reddy's, Lupin, Oro Pharma. You can see it's all about pharma stocks right now. Sun Pharma, Zydus, Suvain. On the losing side, Dabur India, because of poor business updates, and that's where the pain is. And then it's a whole bunch of mid-cap IT stocks as well. Persistent, KPI Tech, Emphasis, Coforge, and the like. Sona, BLW, obviously the tariff impact over there. So this is going to be the broad theme that we'll see through the day. And Alex, that's what's going to dominate at least for the first half.
Absolutely, no doubt. Then you've highlighted several names that are reacting from the healthcare and pharmaceutical space in particular. On the downside, we'll speak about Dabur in more detail, but I just want to pull up the small cap index as we're speaking, because Neeraj and I were having a chuckle about this. Look at the small cap index. It is turned into the green. It is trading with gains of 0.25% at this juncture, and at the way that things have opened up, you wouldn't be too surprised if even the texture or the breadth of the market changes over the course of the session for it to favor the advances. At this juncture, of course, declines are favored. But I want to go back to Rahul on a point that he was making with regard to the China differential and that going out of the window. I'm just wondering, Rahul, whether this tariff that has been announced overnight, there's no clarity as to whether this will pile on to the tariffs that were announced earlier. And so if that is indeed the case, then that differential does not go out of the window, right?
Yeah, so I think what is assumed is that it's an extra 16% on what was already announced previously. And I think the total tariff right now rests at 26%. That is our understanding. Again, as I was telling Neeraj a little earlier, this is open to interpretation because it's still early hours. We'd like to hear from the government of India officially as to how they're reading it. But I think if you were to just look at the absolute number of 26 versus 34 on an 8%, I don't see too many companies wanting to move manufacturing or anything like that away from China just on this tariff differential. If it's incremental over and above what you're saying, then that certainly holds. But if it's an extra, because from what I have understood is he's just ascribed a 50% on the value added tax, which is basically the tariff plus the non-tariff plus VAT. And he's just assigned a 50% on that. So I think it's more incremental. And which is why I think that differential at 8%, is not something to write home in a very material fashion. But, as your colleague was mentioning a little earlier, I think, the differential with companies like Vietnam, Bangladesh, etc. is very large. Now, whether that results in textiles or electronic goods or chemicals moving in from these countries over to India, or even coffee for that matter, because Vietnam is a very large coffee producer, that remains to be seen. But again, like I was saying, I think, the overall trade deficit with India is about $46 billion. So it's not going to move the needle in a very material way from an absolute tariff point of view. I think the bigger indication is on global trade, global growth, and therefore the resultant impact that we're seeing on India. And I think that's why I went back. I started my discussion with looking at the 10-year bond yield in the US and in India, where what this implies for residual growth as a result of these measures.
Yeah, and very pertinent points that you're making. Rahul, from that perspective, just to take that conversation a little further, we're talking at a time when Dabur has come out with commentary, and the consumption story that we're talking about from that perspective is not as strong as one would hope, especially in the context of a global growth slowdown, particularly in the US. So obviously the attention of the Indian investor turns inward, and that's not looking like a very pretty picture yet either. So where do you deploy funds at this juncture? How do you behave?
So I think you've hit on a very important subject, Alex, and I think maybe I'm sounding like a bit of a contrarian right now, and believe you me, the heart is bullish and we want India to do well because my business relies on the markets going up. But I don't think people are factoring in earnings downgrades to the extent that they are supposed to be. And I think if there's one thing that the last 4 quarters have taught us, it's on average 60% of the stocks are getting downgraded across the universe. Now, let's take all the 3-4 pieces of the puzzle which can potentially move the index. And this is what I was saying to Neeraj a little earlier. You highlighted Dabur. I don't think FY26 is going to see even a 10% profit growth for consumer companies on the large cap consumer staples. IT, I think the three of you have been discussing. Again, if you look at the large cap companies, TCS, Infi, Wipro, HCL, Tech Mahindra, again, you're looking at about a 10% kind of earnings growth if you're lucky out there. Now, banks, the credit growth has already, if you look at the scheduled credit growth numbers that have come in just a couple of days back, in the non-food credit, you've already dropped down to 11%. Retail, agriculture, consumer loans are all down to about 11.5%. Industry credit growth is down to 7 to 8%. So if you're going to go into a situation by FY26, you have banks, IT and FMCG broadly going to give you 8 to 11, 12% kind of earnings growth. Even Reliance add to that probably a 10, 12% earnings growth. You tell me how the index is going to move if you value companies on FY20. It is not possible. Now, that is why you are seeing that the entire sell side and buy side has moved to FY27 at the start of FY26, because you're not going to be able to, justify companies on FY26 valuations. Now, look at the auto sales numbers that have come in. PVs are struggling. Yes, luxury two-wheelers like Eicher and Bajaj Auto and the likes have done well. Exports have done well, but domestic is struggling. So what are you left with, right? And I think if you look at the last 2 years, the road awardments that the NHAI has done has been very poor. In fact, the NHAI has not met its own target. So cement growth comes into question, whether you are actually going to get 7-8% kind of growth in cement. So you are actually looking at a year where I have systematically broken down for you sector-wise as to why earnings growth would be a challenge. Now, the only question is, how far does the market want to look out, FY 27, 28, and then start justifying valuations? According to me, since you brought up the small cap index yourself, Alex, a few minutes back, I think most small caps in India are still at least 20 to 25% overvalued on a 3 and a 5-year mean. Most of them are still trading at 1.5 to 2 standard deviation above mean, or at least 1 standard deviation above mean. Now, does that mean the market will correct? I don't know. But is there a case for the Nifty to visit 21,000? I think there is a very strong case.
21,000. Wow, Rahul. You are... Okay, we need to have a...
I'm sorry to speak my mind, Neeraj.
No, why should you be sorry? No, Rahul.
It may be an anti-consensus view, but I'm arguing with logic here. I mean, I'm happy to listen to a counterpoint of view.
Rahul, we get you for you speaking your mind because it helps. So thank you for putting that out. Please don't be sorry at all. No, but this is important. Sorry, either of you... I have a question to Shrikant, but either of you want to make a point?
No, absolutely. I was just making the point that, Rahul, so what do you do right now? You're rightly saying IT is looking bad. We have underestimated how painful your quarterly numbers are going to be. So what is the strategy right now for an investor, for a viewer who's watching? What's the outcome of everything that you're saying?
So I think, Tamanna, it's not all gloom and doom. Yeah. Let's look at where earnings growth can come, right? There are 2 sectors that straight away tell you earnings growth, or actually 3 that tell you earnings growth can come. One is consumer discretionary. I think hotels are still doing well. Airlines are still doing well. Alcobev stocks are still doing well. I think those are 3 pockets where we could still buy because I think earnings growth is still going to be strong. I think the one sector that has gone into a different orbit in India, and I think that's large part thanks to the Prime Minister and the Defense Minister, is the defense sector. I think if you've looked at the news flow over the last 30 to 45 days, we've had close to about 1 to 1.5 lakh crores of orders that have been announced and awarded. And I think you've seen the defense stocks rally. So that could be potentially another area. And the third is agrochemical stocks. I think that could also have a very good play. I think valuations have reset. I think if you look at names like Sumitomo Chemicals, which we're recommending, I think you could look at 25-30% kind of growth in some of these names like Sumitomo. I think in defense, we have recently upgraded Solar Industries. We like Hindustan Aeronautics. We like Bharat Electronics. You know, I recently met the managing director of a very large, defense equipment manufacturer. And he said the amount of work that they have done in Russia, Ukraine, and Middle East, that when these cities come up for reconstruction, that's a huge opportunity for some of the Indian companies that have done work there. So I think off the bat, defense, consumer discretionary, look like 3 sectors where we could potentially look at. And in auto as well, I think luxury auto, whether it's an Eicher or companies that are strong, exports, also very large spare part components like a Bajaj Auto. I think those could also potentially be looked at. So it's not like you can't be buying stocks. And I also think mid-cap IT, while the growth rates will come off, I still think there'll be at least 2.5, 3x than what the large cap IT companies would give you. So you could potentially look at names like Coforge if that interests.
Wow. Okay, Rahul, that's a nice list and nice summation of almost everything. So thank you so much. And once again, love you for speaking your mind. So please continue doing that.
Thank you so much for having me, Neeraj. Appreciate it.
All right. I have a question for Shrikant Chauhan, but I want to get in Vijay Kedia in the conversation as well. And Mr. Kedia, thank you so much for waiting by patiently. Really appreciate this. मैं आपके पास 1 मिनट में आता हूँ सर, लेकिन उसके पहले श्रीकांत चौहान खड़े हैं और उनके पास से एक टेक्निकल लेवल समझने हैं. Then we want to come to you. Do you see the Nifty at 20,000 as well as Rahul Arora did? But Shrikant, opening thoughts, and I have one pertinent question. Pharma 4.5-5% higher. Is this the extent of the rally, or could there be more, or would you take profits here in Pharma?
See, I think it is like reaction to the overall expectations which was there in the market on the street for the sector. So I am of the view that it is better to stay away from taking any exposure in those companies, especially which are like having a very huge export to US. But yes, in that space specifically, we should focus on contract manufacturing companies, especially DVs, Syngene, or Piramal Pharma sort of companies, where I think these companies should do well, and Lotus Lab. So these are the 3-4 stocks on which we are focusing in this particular move. And if there is any correction, then it will be an opportunity for investors to take a specific trade as well as investment call.
All right, thank you so much, Shrikant, for staying on with us. And this is an important day for our viewers and for everyone to really understand what is going on. And hopefully, to help us do that is our next speaker, Vijay Kedia, joining in. Now, he is someone who everyone wants to listen to in terms of what you should do and has the best way to explain what is going on. First, let's come to that, Kedia ji. How are you seeing what's going on, और ट्रम्प साहब क्या करने की कोशिश कर रहे हैं? आप इसको कैसे देख रहे हैं?
नहीं, मेरे को लगता है शायद उनको भी खुद पक्का पता नहीं है कि वो क्या करना चाह रहे हैं। वो तो कभी जंप करते हैं, कभी पंप करते हैं, तो उनका कभी जंप करते हैं, तो उनका अपना अलग ही एक उनका हिसाब किताब चल रहा है। लेकिन ठीक है, अल्टीमेटली जो वो बोलते आए थे कि हाँ मैं इस तरह से इम्पोज करूंगा, उन्होंने जो भी है उन्होंने टैरिफ लगाया और इंडिया को थोड़ा सा बख्शा, उन्होंने थोड़ा सा कम टैरिफ लगाया है। इसके लिए आपको खुशी मनानी चाहिए।
बट वो खुशी दिख नहीं रही है मार्केट्स में। आप कैसे ये खुशी बनाएंगे? अब जो लोग हमें देख रहे हैं उनको क्या करना चाहिए? व्हाट शुड बी द स्ट्रेटजी राइट नाउ? वी हैव ऑलरेडी सीन सम रिकवरी एज वी आर स्पीकिंग, Kedia sir, in small cap and mid cap. Is this an opportunity for those who are brave to come into the markets and show faith?
Let me tell you one thing. I will put it in a different way. Forget about the market for a while, because market is very sensitive, as we all know that. It keeps on fluctuating. But ultimately, I think that it is good for India. हम लोगों को ultimately ये अपने को self एक awareness हमारा ये create होएगा। और मेरा एक point है that we have been imposed with what 26% tariff, and I read somewhere it is actually 27% compared to 54% in China. तो हमको इतना बड़ा leverage हमको मिला against Vietnam, against Thailand, against other countries. इसमें भी अगर ये blessing in disguise है, मेरे को लगता है इसमें भी अगर हम इसका फायदा नहीं उठा सकें और अगर हम अपनी मैन्युफैक्चरिंग कैपेसिटी को अगर अभी भी हम इस तरह से वर्ल्ड लेवल पर अगर नहीं ला सकें तो ये हमारे लिए दुर्भाग्य हो गया। मेरे लिए लगता है कि इसके अंदर में अपॉर्चुनिटी ढूंढनी चाहिए।
Okay, Vijay ji, namaskar, Alex here. I'm just wondering, in a world that seems to be getting more protectionist from India's perspective, of course, there's a large consumption story right here as well. Unfortunately, the initial readings that we're getting from a few companies is not encouraging, at least at this stage. Perhaps it will improve as government spending starts kicking in the new financial year, etc. So, where would you be deploying? And I know that you are a firm believer in the building material space. You have invested in some of these companies in the past. So how would you be strategizing in the new year?
You see, one thing I'll tell you, we have to find the stories in whatever is happening. हर समय आपको सब माहौल अनुकूल नहीं मिलने वाला है कि सब आपके लिए फेवर का होगा और every time you will make money. We had been making money for last 3-4 years. Now this is time to consolidate. And second, coming to the story, I feel that is still like tourism is a big story which is going to play out for next 10 years. So, and there are so many proxies to tourism. It could be hotels and could be airlines and could be so many other things also. So I think this is what government has also understood, that India has a huge potential. You know, as I had said somewhere, now we have $250 billion of revenue coming from tourism. It can be scaled up to maybe $1 trillion in next 7 to 8 years, or by the end of this decade. And I think government has understood. So I think tourism should do well, and selectively, like other infrastructure, should also do well. And ultimately, electrification is the order of the day. It is going to stay here, whether tariff or non-tariff or domestic or export or whatever. So I think there are few stories which should play out in this decade.
You know, this is very interesting, Alex and Tamanna, because budget last year, mid-year budget, at a post-budget party, Vijay Kedia was negative. And we know markets have largely been sideways to a negative move, especially after December. We are hearing Mr. Vijay Kedia say that now is the time to hunt for opportunities. And therefore, it may well be that maybe the Nifty doesn't do too much, but individual pockets might see strength. And Mr. Kedia, this is music to the ears, right? Because I'm literally seeing a change of stance from Vijay Kedia, the investor, the maverick investor. So, आपने 2-3 pockets तो बता दिए. These are all, at least the response that you gave to Alex's question, वो थोड़े छोटे pockets थे. बड़े सेक्टर में क्या व्यू है, मतलब विच विल एसेंशियली ड्राइव द स्टेबिलिटी ऑफ द निफ्टी, कि बैंकिंग में हुआ या फॉर एग्जांपल आईटी में हुआ या स्पेशलिटी केमिकल्स में हुआ, जहाँ पे ये टैरिफ्स का इम्पैक्ट है, लेकिन आपकी बड़ी इन्वेस्टमेंट्स हैं स्पेशलिटी केमिकल स्पेस में भी, सुदर्शन एटसेट्रा, इफ आई एम नॉट रॉन्ग. what do you do with some of the large pockets?
No, I will keep on holding them, Neeraj. मेरे को उसमें कोई विशेष फर्क नहीं पड़ा. I hold some pharma companies also. I will keep on holding to it. And तो मेरे को लगता है sir, government is also focusing on infrastructure, as you said, the large sector. I think infrastructure should do well. पावर सेक्टर एक्चुअली इतना स्कोप है पावर के अंदर में, चाहे वो पावर फाइनेंस की कंपनियां हो जो पावर को फाइनेंस करती हो या लोन देती हो या जो भी हो, या ऐसी कंपनियां, उनके अंदर में भी बड़ा मेरे को स्कोप लगता है. पावर से रिलेटेड जो कंपनियां हैं, ये सब हमारी डोमेस्टिक थ्योरी है, सब डोमेस्टिक हमारी ये सब स्टोरी है. इसके अंदर में कोई फर्क नहीं पड़ता है कि इसके अंदर में चाइना क्या कर रहा है या यूएस क्या कर रहा है. तो हमको थोड़ा सा सेफ होकर चलना है, एज यू राइटली पुट इट आउट. So maybe index-wise, I'm not very bullish. I don't see that index is going to, we are going to see a new high in next 2 years. So I don't know about 3 years. So I am not in that camp. So I think index should consolidate here, and individual stock should do according to their merit. And one more thing I would like to add here, Neeraj. As I had so many on so many platforms, I had said that nowadays after 2003, bull markets are longer and bear markets are shorter. I think this bull market made a top in September 2024. From that, I don't have any money, पक्का data मेरे पास में नहीं है, लेकिन I have seen after 2003 that this जो bear market आता है, it gets over in 9 months. So accordingly, एक खाली तुक्का के लिए मैं बता सकता हूँ कि I think so maybe by June this 2025 or maybe next 2-3 months time, this market will make its bottom. That obviously nobody knows. But more or less मेरे को ऐसे लगता है, and index will consolidate, and individual stocks will have their own territory, or will chart their own story.
Okay, well, one hopes, केडिया जी, आपके मुंह में घी शक्कर and everything else that you desire. एक छोटा फॉलो अप क्वेश्चन ये है केडिया जी के पीपल आर, मतलब हमारे जो पहले गेस्ट थे वो भी बोल रहे थे कि अभी तक द क्रेडिट ग्रोथ एटसेट्रा इज नॉट पिकिंग अप, बट गवर्नमेंट ने जो जोर लगाया, पेडल लगाया है, वो लास्ट कपल ऑफ मंथ्स में लगाया है. आरबीआई इज कंसिस्टेंटली डूइंग स्टेप्स एज वेल, पीएलआई स्कीम्स आर देयर. क्या आपको लगता है कि डोमेस्टिक ग्रोथ इटसेल्फ विल इंप्रूव? आपकी इंडिविजुअल कंपनीज के साथ आप जब बात करते हैं, आर पीपल टॉकिंग ऑफ अ पिकअप इन ग्रोथ, या अभी भी ग्रोथ स्लगिश है?
नहीं, ये डिफरेंट पॉकेट्स का डिफरेंट एक्चुअली नजरिया है, लेकिन मोरलेस मेरे को ऐसे लगता है कि मैं जो भी कंपनियों के साथ में बात करता हूँ, उसमें कोई स्लो डाउन की बात नहीं कर रहा है नीरज भाई, कि हाँ मेरा आगे ग्रोथ नहीं दिखाई दे रहा है या आगे कुछ कंफ्यूजन है. ऐसा तो नहीं लग रहा है. हो सकता है जब वो स्लो ग्रोथ की बात कर रहे होंगे, ऐसा हो सकता है, लेकिन मेरे को ऐसे लगता है कि आगे जाके देखो 6-6.5% भी अगर हम ग्रो करते हैं, एक बात तो पक्का है कि हम ये 6-6.5% से इससे हम चाइना तो कभी नहीं बन सकते 25-50 साल के अंदर में, इस ग्रोथ से अगर ये 8-10% तक नहीं जाती है. लेकिन 6-6.5% की ग्रोथ भी अगर हम करते हैं, उसमें भी कई इंडस्ट्रियां ऐसी होंगी जो 15-20% ग्रो करेगी, कई होगी जो 0% ग्रो करेगी, जैसे वो कंज्यूमर एफएमसीजी वगैरह जो इनके अंदर में, जैसे आप बता रहे थे डाबर वगैरह का जो भी है, हो सकता है वो ग्रोथ नहीं करेगी. तो ऑन एंड एवरेज जो 6.5% की ग्रोथ आएंगी, उसके अंदर में कई इंडस्ट्री है विच विल राइज फास्टर देन द एवरेज ग्रोथ रेट.
केरे जी, हम भी बात कर रहे थे कि आपका टैरिफ सॉन्ग तैयार है कि नहीं?
नहीं, अभी तैयार नहीं है.
आइडिया, हाँ, आप देखो, अब तारीफ क्या करूं उनकी. मैं आपको आइडिया,
अच्छा आइडिया दिया. अरे अच्छा आइडिया दिया यार, सही. तारीफ क्या करूं उनकी, जिसने मुझ पे लगाया और मार्केट को डुबाया, मुझको सताया.
क्या बात है,
क्या बताया, क्या दिखाया.
ये तो देखिए ऑन द स्पॉट कोलैब हो गया हमारा. दिस इज अ कोलैबोरेशन,
जुगलबंदी.
बट नो, टू कमिंग बैक टू द पॉइंट केरे जी, जो आप कह रहे हैं कि देयर आर पॉकेट्स ऑफ opportunity. The kind of business updates we're seeing, what we will see in Q4, how important does this become? If we are looking inwards, the world is looking inwards, तो हमें भी हमारा देखना है. From our point of view, corporate India की strength पर आपका क्या व्यू बन रहा है?
देखिए, मैं एक बात आपको बताना चाहता हूँ. मैं ये जो 6-6.5% का ग्रोथ जो चल रहा है ना, मैं पर्सनली, मेरा कोई अस्तित्व नहीं है, मेरा कोई वजूद नहीं है, मैं कोई इकोनॉमिस्ट नहीं हूँ, मैं एक सिंपल छोटा सा इन्वेस्टर हूँ, लेकिन मैं इससे बहुत खुश नहीं हूँ. जिस हिसाब से दुनिया बढ़ रही है और जिस हिसाब से मैं बार मेरा ध्यान खाली चाइना पे जाता है कि हम लोग बार चाइना पे हम लोग अपने आप को कंपेयर करते हैं, तो मेरे को लगता है ये 6-6.5% की ग्रोथ रेट जो इंडिया की है वो सेटिस्फैक्टरी नहीं है. हमको इसको 8-10% की ग्रोथ रेट लेकर आना पड़ेगा. और इसी बोलकर मैंने ये बोला कि इस ग्रोथ में इंडेक्स वापस कोई नया भाव दिखा दे 2-3 साल, ऐसा मेरे को लगता नहीं है कि इंडेक्स कोई नया दिखाए। कुछ कुछ पॉकेट में आपको अपॉर्चुनिटी मिलेगी, लेकिन उसके लिए आपको बहुत सजग होना पड़ेगा। यू हैव टू वेरी केयरफुल, यू हैव टू स्टडी रियली वेरी हार्ड कि मैं किधर पैसा लगाऊं, किधर पैसा नहीं लगाऊं, क्योंकि जो इजी मनी कमाने का जो टाइम था वो मार्केट में एक बार ओवर हो गया है। अब जो आगे आने वाला टाइम है वो थोड़ा मेहनत का, मशक्कत का टाइम है इसके अंदर में, और वो पैसा इतनी जल्दी नहीं आएगा जितनी जल्दी पैसा पहले आया था, ऐसा मेरा मानना है। तो जो ग्रोथ है जो इंडिया की वो ठीक है, 6-6.5% ग्रोथ ठीक है, लेकिन हम फास्टेस्ट ग्रोइंग इकोनॉमी कोई मतलब नहीं है। फास्टेस्ट ग्रोइंग इकोनॉमी क्या, फास्टेस्ट ग्रोइंग इकोनॉमी होकर भी आप $250 बिलियन आप ऐड करेंगे। मैं हमेशा बोलता हूँ वो चाइना 5% भी ऐड करेगा, हमसे फास्टेस्ट नहीं है, स्लोवेस्ट बोल दो भैया, तब भी $1 ट्रिलियन ऐड कर लेगा वो। तो मेरे को चाहिए इंडिया का विकास ऐसा हो कि हम 8-10% का, और वो एनिमल इंस्टिंक्ट से होगा। उसको अभी तक समझ में नहीं आता है कि ये आगे ये कैसे होगा, गवर्नमेंट कैसे करेगी, प्राइवेट सेक्टर कैसे इसके अंदर में उनका योगदान होगा। तो ये थोड़ा समझने वाला बात है। इसी के लिए मैं ये बोल रहा हूँ कि ये बहुत सिलेक्टिव पॉकेट्स के अंदर में इन्वेस्ट करेंगे आप, तभी आपको अच्छा पैसा मिलने वाला है।
केडिया जी, जस्ट अ फॉलो अप टू दैट, एंड आई अंडरस्टैंड इट कि हम समझना चाह रहे हैं एट दिस पॉइंट कि एनिमल स्पिरिट्स which way are they heading, right? The base assumption at this stage is that government will start spending more. It has already started. December, January of the turn of the year, the assumption was that they had already started spending much more, and the assumption that they will continue to do so. So that support will be there. In your estimation, the consumption that was expected to come through, and we all spoke after the budget, the tax breaks that will start in the month of April. In your opinion, are there negative factors that are curtailing that will prevent that from having a significant effect, or is it too early to say?
Which effect? Sorry, please.
The consumption story, the consumption benefit from the tax cuts. Are there other factors that are at play to say that yes, this is positive, but उसका impact negative है, इसलिए ये पूरा फ्लो थ्रू नहीं हो पा रहा है?
देखिए, मेरे को ऐसे लगता है उसके अंदर में टाइम लगेगा। समहाउ आप ये समझिए, आप जो 11 लाख करोड़ का हमारा लास्ट ईयर का भी जो बजट आपने बताया, गवर्नमेंट स्पेंडिंग दिसंबर से चालू हुई है, हो सकता है उसका इफेक्ट आने के अंदर में थोड़ा टाइम लगेगा। लास्ट ईयर भी, इफ आई एम राइट, आई थिंक देयर वाज अ शॉर्टफॉल ऑफ 2-3 लाख करोड़ और समथिंग गवर्नमेंट कुडंट स्पेंड टिल दिसंबर और सब, उसके बाद में उन्होंने किया। इस साल का फिर इनका वापस 11-11.5 लाख का स्पेंडिंग, इनका बजट आया इनका इन्वेस्टमेंट का। मेरे को ऐसे लग रहा है ये प्राइवेट सेक्टर के साथ में होना चाहिए, गवर्नमेंट का स्पेंडिंग भी होना चाहिए और प्राइवेट सेक्टर भी साथ में इसमें पार्टिसिपेट करना चाहिए। जो बार बार हम सुनते हैं कि वो समहाउ कुछ हो नहीं रहा है, तो प्राइवेट सेक्टर कहीं ना कहीं तक कुछ समझ रहा होगा कि वो क्यों नहीं इन्वेस्ट करना चाह रहा है। चाहे उनको चाइना से चिपर उनको इम्पोर्ट के कारण उनको समझिए उनको प्रॉफिट नहीं हो रहा है, या उनको फर्दर आगे कोई डिमांड उनको क्रिएट नजर नहीं आई या समझ में नहीं आ रही है। तो ये थोड़े बहुत सारे इफ्स एंड बट्स हैं। हो सकता है आज के दिन ये जो टैरिफ वेरिफ लगाया है, इसके बाद में थोड़ा सा कुछ मामला थोड़े क्लैरिटी आए, तो मेरे को लगता है इसी को क्लियर होने में शायद और 3 से 6 महीना और इसको लगना चाहिए। तब तक इसके बारे में मेरा अपना कोई राय नहीं।
ओके मिस्टर केडिया, एक शायद आपके पास फिलहाल इसका जवाब हो ना हो, आई डोंट नो, बट आई वुड लव टू टॉक टू यू मे बी अगेन टू sometime in the next 2-3 days. Does the couple of sectors which are a bit confusing, टेक्सटाइल्स हुआ, केमिकल्स हुआ, फॉर एग्जाम्पल, लार्ज इंडिया प्रेजेंस, ड्यूटी लगी है, बट नेबरिंग कंट्रीज विच आर हायर कॉम्पिटिशन have a much higher duty, right? Vietnam, Cambodia, northwards of 40%. China maybe 34 plus 20, so maybe 54%. So on a relative basis, Indian firms have a lower duty than those. Does that therefore mean that Indian textile companies या Indian chemical companies को बहुत impact नहीं पड़ेगा? Because competitive intensity में वो लोग शायद better match कर पाए.
So this is what I said in the beginning of this interview, Neeraj. This could be blessing in disguise. This is what you should find, diamond in the coal mine. This is what happens, no? ये हमारे लिए कितना बड़ा इंपॉर्टेंट होगा कि आप 27% दे रहे हैं, वो 54% दे रहे हैं, 52 दे रहे हैं, जो भी आप दे रहे हैं आप उसको, ये आपके लिए कितना बड़ा एक अपॉर्चुनिटी है। तो इसको, लेकिन क्या ये इसी बोल के मैंने बोला, ये जो प्राइवेट सेक्टर है, इनको आगे आकर इसका रास्ता इनको निकालना पड़ेगा कि अब हम इस अपॉर्चुनिटी का कैसे फायदा उठाएं, या ये एडवर्सिटी का हम कैसे फायदा उठाएं। तो ये तो मेरे ख्याल से उनके हाथ में प्लेटर में उनको तो गिफ्ट है अगर कंपैरिजन, क्योंकि देखो दुनिया कंपैरिजन पे ही चल रही है ना, आप क्या बना रहे हो क्या नहीं बना रहे हो। अगर समझो हम लोवेस्ट कॉस्ट प्रोड्यूसर नहीं भी है कई चीजों के अंदर में, हमने तो टेक्सटाइल का मार्केट पूरा चौपट कर दिया ना। आप देखो तो किधर से घुस के 5 साल के अंदर में वियतनाम और बांग्लादेश कहाँ से आ गए। उसके पहले तो हमारा टेक्सटाइल के अंदर था, हम लोगों ने उसको बर्बाद कर दिया। हम लोगों ने कोई भी कारण से बर्बाद किया, चाहे उसको एक्सपेंड नहीं किया या उसको मॉडर्नाइज नहीं किया या जो भी नहीं किया, कोई वर्ल्ड स्केल में हमारा नाम नहीं आया। अभी मेरे को लगता है ये हमारे लिए गिफ्ट है, अगर इसका हम फायदा उठा सकें तो बहुत अच्छी बात है और उठाना चाहिए, मेरे को ऐसे लगता है।
Okay, Vijay ji, I know that we normally actually almost always speak to you about equity, but we're speaking at a time when gold is at $3,100+ per troy ounce. And I think if anybody has made money over the course of the last decade, it is the central bank certainly, and it is the Indian household which continues to buy gold. What is your opinion? In this current uncertain time, should investors actively consider buying gold?
I may be wrong because मेरे को मालूम नहीं है, but I think that gold has also become euphoric. Like stock market was euphoric in last 2-3 years. Same thing has happened in gold also. I read somewhere that we have gotten some how much 40% or 45% gold का भाव बढ़ गया 2 साल के अंदर में, in 24 and 25 अगर हम मिलाते हैं तो मेरे को लगता है गोल्ड भी बड़ा यूफोरिया हो गया है। या जैसे पहले इक्विटी मार्केट था, रियल एस्टेट मार्केट था या है या जो भी है, gold is also I think has become euphoric. So I will not buy gold at this price.
Okay, don't buy gold at this price, but hang on to your gold, I assume. I think.
गाना सुनाओ।
हाँ, क्या बोल रहे हैं आप?
गाना सुनाओ, आप बोलेंगे।
गाना सुनाओ।
वैसे प्लान तो नहीं था, लेकिन आपका मन कर रहा है तो आप मना नहीं करेंगे।
नहीं, आगे बोलिए।
I was going to say thank you so much for speaking with us, but Kedia ji, you're always welcome for Ghana, for poetry and for views on NDTV Profit. उसमें कोई शक ही नहीं है।
नहीं, तो देखिए मैंने लास्ट गाना बोला था, ये बॉटम है, इस बॉटम का कहाँ है, किधर है, नहीं है कुछ पता। ये एक भ्रम है और इस भ्रम का नहीं है कुछ पता। तो ये बॉटम का किसी को, भगवान को भी नहीं मालूम है भाई कि यहाँ पर किधर क्या मार्केट का बॉटम बनने वाला है और इधर क्या। वो जब जो लोग बॉटम सोचते रहेंगे, लेकर थक जाएंगे, उस दिन बॉटम बन जाता है। जब लगेगा और अब तो डूब जाने वाला है तो बर्बाद हो जाएगा, उसी दिन यहाँ पर बॉटम बनने वाला है यहाँ पे।
ऐसे लक्षण अभी फिलहाल नजर ही आ रहे हैं। So maybe that timing is right. Thank you, Kedia ji. And you know what I love? He always comes prepared with something, with a snippet, with a.
I don't think he's prepared.
No, it's all
wired.
Verbatim.
On the spur. Yeah, the Tariff song is going to be an interesting one. Thank you so much.
वो बात कर।
Thank you so much for speaking with us. Always a pleasure. We're in uncertain times. What is certain is that gold prices are completely on fire. The yellow metal has soared to an all-time high, and which is why the next conversation that we're having becomes so important. Is this hurting gold financiers? Is there more competition in this space? We will be speaking with George Alexander of Muthoot Finance in just a minute. But before that, my colleague Harsh is quickly setting it up.
Well, absolutely. So gold has gone up 7% in the last month or so, 18% in the last 3 months. So seen a very, very strong rally. In terms of what impact does this have on gold lenders and financiers? So this is how it works. Generally, in a secured gold segment, you'll have a customer come in, submit his or her gold, avail a loan against that gold. Now the price of that gold has gone up. So how are gold financiers dealing with it? Are they seeing customers come in and request for higher value in terms of loans? What's happening on the asset quality front as well, because you're seeing some problems with regard to microfinance, whether that is starting to reduce or taper. And Muthoot does a bit of microfinance as well through its subsidiary Belstar. Also, with regard to when you're looking at Manappuram in particular, you're starting to see Bain Capital look at Manappuram more constructively, and therefore that dynamic and that change with regard to how the competitive environment will likely change as a result of Bain coming in into Manappuram. How is that impacting the lending environment, as well as what can be the impact of that going forward, maybe the next 3, 6, 12 months of this development, and Muthoot will directly be impacted by that. So some of those factors will be interesting to know, and given this quick rise of gold, how our process is changing at a ground level is going to be interesting.
Okay. So all that and more, George Alexander is joining us. He's Managing Director at Muthoot Finance. Mr. Alexander, always a pleasure to speak with you. And today's an interesting day to talk to you to understand what is happening in the space. Gold prices are soaring. What is the kind of impact that you see on your business? Does this make things difficult for you?
Thank you. Good morning. As you say, right, the gold price is on fire. Probably in the last 1 year, it has gone up by almost 40%. In the last 1 year, it has gone up by 40%. So that is where the gold price is. And that's one fact of the matter. But as far as a gold loan financier, we finance against gold ornaments. As far as we are concerned, what is happening is today a customer need not bring the same quantity of gold for the same loan. Probably if he wanted a loan of 1 lakh, he had to bring X amount of gold. But now with the price high, he needs to bring little lesser amount of gold. That's for some people. For some who are actually wanting to borrow the maximum, they get more on their existing gold loans. But having said that, there is a Reserve Bank of India or a regulatory cap on how much we can give. We can give is only 75% of the gold price. That's the maximum we give. But today, if you look our portfolio, the average is only 62%. That means people have taken only an average of 62% of the price. Not that everybody wants the full price. They take loans for their requirement. If they require 1 lakh, they take 1 lakh. If they require only 75,000, they take only 75,000. But there are so many questions of this. So the first part, I think, is how it is impacting. More and more people are able to get gold today. What is it? Is because the gold price is on fire, every day you see at least 2 articles on gold price in the newspaper. So people are now familiar or really coming to realize the gold ornaments which they have has become more valuable than what it was probably a year back. So they feel that they have a little more valuable asset in their hands. And why not use that, monetize it to take a loan?
Okay, so you're saying that whatever the impact is mitigated by the larger number of people coming in for gold loans. Is that the core message?
Yeah. Core message is more and more the market is improving.
Yeah.
See, everybody is growing their gold loan book. Muthoot has grown. We have reached 1 lakh crore of gold or AUM. 1 lakh crore we have reached maybe a week back. So we are increasing. We are growing our book. Banks are also growing their book. So the market is deepening. More and more people are using gold loan as a safe or a quick and an easy collateral to get loan.
Tell me what it means for you or how you are seeing competition shoring up resources, bulking up. Manappuram coming with Bain. You knew that question was coming, Mr. Alexander, so I know you're prepared for it. But you have the big, they're getting the big guns on. So this is getting a more and more competitive space. How are you preparing for that?
So, see, gold loan is a business where the customer needs to feel comfortable parting with the gold and giving it to the lender. So, if Muthoot over the years have got that reputation of a reliable, good, trustworthy lender, and that is why people prefer to come to Muthoot and deposit their gold. Actually, they are giving me 100 or 125 rupees and taking back only 60 to 70 rupees. He actually needs to have more trust in the lender than the lender having to trust him. So the point is that people, first of all, needs a trusted brand, and Muthoot has always been there. But as I said earlier, the market is increasing. More and more people, earlier people who are shy or reluctant to take a gold loan are now coming forward with gold loan. Banks are also doing it. So a Bain or a Manappuram, etc. are coming in. It's not an issue for Muthoot at all, because we have more than 5,000 branches. We have the people there where the people trust, and we still keep growing. we should be able to do growth in spite of others coming. But then it is not that somebody is taking away my business or I am taking away somebody else's business. The business is there for customers, and as the market is increasing, everybody is getting a pie. And those who are more in the pie, more prominent there, they will get more business.
Got it. No, Mr. Muthu, I'm just trying. There is no doubting the fact that the brand name that you've built is excellent. But I'm sure you get enough calls for a large PE firm wanting to take a minority or a majority stake in your business, co-invest, etc., right? Is there a case for refusing those? That's my question.
Okay, well, no, sir, because today our capital adequacy is more than 27, or almost touching 30%. The regulatory norm is only 15%. So capital is not an issue for us at all. Today, even our borrowing or leveraging is only about 3 times, less than 3 times. So we have sufficient capital with us probably to grow, and we are actually generating good money also. So we have a good profit generation also, which is always plowed back into the company. So as of late, we don't require capital. As you say, of course, there may be people who are wanting to get invested in the company like PEs, etc. But I don't think today people realize that we don't need it. So I don't think they are coming now.
Got it. Okay. You must be in a silent period, so I won't probe for too many details. But broadly, has the quarter been of acceptable growth metrics, or were there challenges?
Growth metrics, I don't think today, if you look at the guidance, you have always been giving a very, very low guidance of 15% every year. But usually we do 20, 25, etc. every year. We just say we do 15%. This year, we have already, since our AUM has grown 1 lakh crore, we have already touched 40% growth this year. So probably next year also, if we don't know if things are bright, there can be good growth. There can be good growth next year also.
Okay.
Next year means this year.
FY26. Yes, indeed. I guess I won't probe you for more because I wouldn't want you to violate any of the SEBI norms. So we'll leave it at that and maybe talk to you post your numbers are out, sir, in order to try and figure out what is the good growth number for FY26 looking like. But thanks for joining in today. Really appreciate it.
Thank you.
One business which doesn't get impacted by the tariffs at all, but we'll talk about businesses which do get impacted by tariffs on the other side of this break. Stay tuned. Just keep in mind that the indices which were holding out well, you could argue still doing that except for IT. So IT is completely been bamboozled, 3.5% in trade. And if I can bring up the 6-month chart of Nifty IT, you'll probably see that from the December 11 peak. I mean, it's been a rock, like a rock dropping, or maybe not as steep, but certainly very, very steep. This must be, so 6-month performance is 16%, but from the December peak, this must be maybe 23 or 24%. That's a serious pullback in the IT majors. Probably one sector which has gotten literally decimated. I mean, the last time that something like this happened to a sector was maybe defense in 2024. So bear that in mind. Okay, small caps too in the red now, by the way, and the mid cap index is about 0.6% lower in trade. The one which is the most well behaved is Nifty Bank. But as we said, we've done one set of views, both institutional and individual investors in Rahul Arora, Vijay Kedia. We get in an important sell side view. Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital, joins us on the other side. Stay tuned.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Well, I'm back with India Market Open right here on NDTV Profit, and a delight to welcome in Sandeep Bhatia, Managing Director, Head of Equity India at Macquarie Capital on the show. Sandeep, good having you. Thank you so much for taking the time out, pertinent day to have your thoughts and insights. How have you viewed the spate of announcements that happen at 2:30 a.m. India time? I mean, is this a bad one for risk assets like equities, or is it still a moving picture?
So there's a lot to talk and discuss and understand. It requires much more time. I'll just give you key takeaway points which are important. One, it's bad for all financial markets. It's bad for global GDP growth. It's less bad for India. It underlines the fact that India is not as exposed to global trade flows and US imports as much as, let's say, China, Japan, South Korea are. But if there's shrinkage of global demand, India also sells to other countries, and that will have an impact. I think we are seeing the rise of a new global order, the order in which the US was the consumer of the last resort. It's a technical term. Essentially, if anything happens, the US economy will come in and bail everyone else out by consuming and buying things and products from them. That's now not going to happen. I think it will create significant political and social imbalances around the world, but that's a longer topic. In the near term, India remains more in a better place than almost any other country in the world. That's the key takeaway, at least for the short term. I expect renegotiations. I expect a bilateral trade agreement to come in by Diwali or before that. And to that extent, the tariffs that we are going to see now, 26%, could even fall lower.
Okay.
That's it.
Okay. No, Sandeep, so let's say we will have the time, if you have the time today, to get into details as well. But I love the summation, so thank you for that. Now, my question, though, is this, that if India is relatively better placed than some of the others, but your larger statement was that it's bad for financial markets by and large, does a relatively better placed economy and market do well if the rest of the world isn't, or does everything suffer?
I think everything suffers. We have to accept that. When you say I'm doing better than others, that if everyone is flunking in the class and if you're getting a grade, A grade, that doesn't mean that you got 100 out of 100. It only meant that everyone got 30 out of 100 and you got 60 out of 100. So that's what it is. So that's my key message, that we are definitely going to do much better, but everyone else is going to suffer. And the impact of that will be across the board. It will also mean that financial markets, which look at the US to stabilize every time there's trouble, cannot look at US both in terms of consumption, demand, and also in terms of supporting institutions to bail out financially troubled regions. So yeah, so it's not something which is immediately a pressure point. But if there's an accident elsewhere in the world, and who knows, there could be an accident even in the US, each country is on its own.
You know, Sandeep, good morning. Tamanna here. These are strange times where we all turn into economists, geopolitical experts, Trump mind readers, and so on and so forth as we're trying to figure out what to do. But one scenario painting that is turning out is that US ends up self-isolating. The world tries to figure out how to move on without the US in the picture. As things stand, do you think India and Indian equity will now focus more and more on domestic plays as the world becomes more inward looking?
Well, yeah, it can happen that the US completely self-isolates. We'll have to wait and see what are the political fallout of this. It's not going to be easy for the US consumer. Inflation is going to rise, even if half the tariff increases are rolled back eventually. I don't know how long, whether they happen this year or they take longer. There would be impact on financial markets because the earnings of companies will suffer. So all companies who decide to take that hit will suffer. So financial markets, to that extent, earnings growth can come off. And the US also will see a rise in inflation. So the Fed is now in a tough place. The fiscal deficit of the US is at record levels. Indebtedness of the US is projected to go up. The US has always been a indebted country and will continue to do that. So will you really think that the US Fed can have the strength to bail out the US economy if things go bad? Yeah. So we wait and see. I think in the near term, there is a bit of a risk off which will happen. And all of us have to hope that there are no major accidents, but that's no guarantees for that.
Okay, so having said that, if we are going to focus on what's happening domestically and factors over here, Sandeep, if I look at Indian equity, already been beaten a fair bit, valuations have come off, and then you have now Q4 is going to be the next event we look at. Of course, with the tariff overhang. What is your assessment of how corporate performances are going to pan out, and are we setting up for a slightly better FY26 relatively?
So fourth quarter earnings are quite immaterial. I think they're already factored into the market. So I would not think that there's any major negative reaction. For 26, yes, we should have stronger growth coming through. If this tariff had not happened, I would definitely be much more certain. I'm now hoping that we see a quick resolution to the tariff wars. I am also now hoping that the US, also tries to unwind this, and this is a more political positioning rather than economic stand for the longer term. But if this is a minimum 10% duty, in 23, the average tariff that the US charged to the rest of the world was 3%. Even if now it goes to 10%, it's like 3 times more tariff. So there is an impact on corporate earnings. And assuming that none of it is actually passed on to the US consumer, which is also a very brave assumption, it means that corporate margins profitability takes a big hit. And to that extent, earnings growth, even for India, if global demand takes a hit, will come off. I think all this is slightly difficult to immediately factor in. So the markets will take some time. And as I said, therefore, better than the last 6 months is the outlook for financial markets for the coming year. But a lot needs to be seen, and a lot needs to come through still in terms of events and actions.
All right, Sandeep. So, okay, let me isolate and keep the tariff impacted sectors out. Ask you about the indirect impact sectors, right? The biggest loser today is IT. But I was scanning since December peak. That sector is down almost 25%, factoring in maybe fears of AI and disruption, and now global growth slowdown as well. Is it baking in the worst, or do you think there is still some room to go for IT multiples to contract?
I would say yes, they would agree with you always that yes, the worst is probably over for IT. But, if these H-1B visas, we have not seen any impact. But if we see that also come under the scanner, services have not been talked about. And I was very positively surprised that he didn't mention anything. But if they decide to take it under the scanner, then that's a separate thing which will happen. I hope that does not happen. But yes, if there is US growth slowdown, which looks very likely, then to that extent, IT will also get hit. I would say, all things remaining the same, pari passu, everything is the same. We are all through this correction phase for IT for at least 80% of the time. So we need to see if there's suddenly new things thrown into the pot, which we have to factor in. Most of the pain is behind us rather than ahead of us.
Okay, yeah, because the cuts are very, very steep in the session today as well, and I'm guessing that you would believe that's true for both IT and ER&D, because ER&D has a fair degree of Europe presence. Some companies have a large auto presence as well. Would the same hold true for them, because the dynamics for them slightly different than maybe IT services?
Yeah, the same for ER&D. And I think you raised an important thing that everyone sells around the world in the end. And India will now have to quickly move. Unfortunately, we have not been quick enough to do this, but with the